So we're talking about your finances this noon hour.
Yep, interest rates are going up. Is that good news or bad news? Les Szarka with Szarka Financial is the man with the answers. I guess it really kind of depends on where you are and what you're doing right now, because it's a good thing and a bad thing.
Right. It depends on which side of the equation you're on. You know, we've been talking about interest rates going up now for, probably about 8 years. They've been ridiculously low for 9 years.
Ridiculously low.
Very, very low. And so, consequently, with finally the Fed thinks that the economy is going to be strong enough where it can absorb these higher interest rates. So that's the good news. The good news is that the economy is probably at a place now where it's stable enough where we can see those interest rates going up.
So let me ask you real quick. So then you suggest, like, do you bank shop? Do you kind of see what's best to put, where to put your money, and then start investing it, and that will help too?
Well, we're at the really early stages, so there's not going to be this huge difference between shopping the rates. You might get 0.2%, something
Not
else.
much.
But we're at that point right now where, I was telling you, there's winners and losers, So, the winners here are going to be people that, are looking for higher interest rates on their savings and CDs. The losers are going to be our people like yourself that's looking to buy a house, and, you can have higher mortgage rates. So the economy is doing better, but then if you also own bonds, which is kind of the focus what I want to talk about today, is that there you've got to be careful because those bond values could be going down, those interest rates move up. So it really depends on the trajectory, how quickly those rates move up. If it's a nice steady pace like we had between 2003 and 2007, then those bonds should probably be okay. If it's all of a sudden undulation and you see a big increase, then we got to be careful because those bonds that you currently own could be going down in value.
What's the best advice can you give us? I mean, for those who are saving or those really heavy into bonds, what's the best piece of advice?
Well, you have to this is the time you really want to take a look at what kind of bonds do you own. So if you're owning long-term bonds, you got to be really careful in a rising interest rate environment. So you want to have shorter duration. You also want to be careful, because we are getting near the top of the market right now. So you got to be looking at the credit worthiness of these companies. Also, we might be slipping into recession next year, the year after. So this is kind of the time really where you want to reflect and take a look at the bonds that you're currently holding. Are you holding the right types of bonds? Not all bonds are going to be adversely affected the same way as interest rates go up. So this is the time you want to, maybe it's not, we want to get a second opinion or some professional help to make sure as interest rates continue to rise up, and this is probably going to be for a number of years. This isn't going to be something that just happens for a few years.
Kidding.
Unlike the stock market, which tends to move like a roller coaster, bond interest rates tend to move in long cycles, from let's see, 1950 to 2000, we saw the rising interest rate environment, but for my entire career, from about 1982 to today, that's 30-some years, we've seen interest rates coming down. So when they start rising, it's for long term. So be careful out there with the bonds that you own. Make sure that you're owning the right type of bonds right now.
What about the markets? Any advice on where we perhaps should move our money? Maybe we should go to more techie items?
Are you talking about stocks?
Yeah, I'm just talking about stocks.
Like the
considering the interest
stocks?
Well, I would be careful with the FANGs. Those have had the biggest rise. FANGs meaning, like
Facebook,
Netflix,
Amazon,
Google, those types of stocks. So you got to be careful. Those are the ones that have had the biggest rise. So when you see the market eventually turn, and it, maybe 6 weeks, 6 months, a year from now, those are the ones typically that will come down the most because they have the most room to fall. A stock that hasn't gone up quite as much when the market turns won't go down as much as the one that's really gone up substantially. So the FANGs are the ones you really have to be careful of right now. But we're going through, the last couple of times I've been on, we've seen a lot of volatility in the market, which is still continuing.
Right.
Now you got the trade wars that are brewing out there, the potential trade wars, I should say. So there's a lot of things out there that's making the market nervous right now. So I would just be a little bit cautious. I tell folks I'm driving with my foot on the accelerator, but the other one's like hovering above the brake.
Just in case. Just in case. Proceed with caution, we keep saying,
Right.
and you are the one that can help people sort that out. So if you do have bonds and you don't really know what to do and you want to take advantage of these rising interest rates, where do you start? And if you have those financial questions, you can talk to Les Szarka and his awesome team there in North Olmsted. We have the number there on your screen, but you can always find it on fox8.com. Click on Seen on TV.
Leave it to the pros. I mean, this is the time of, the year with what's going on. Leave it to the pros because you can really step in some holes, if you will.
We're in some interesting times right now.
Yeah, you need to look out for your financial future, and you can help us lead down that path.
He's just going to save you some money.
Yeah.
He wants to make you some money. Let him. Thanks, Les.
Thank you.